Hello everyone. Today we are going to discuss on commercial vehicle industry with the perspective of investment. Friends, as an investor, we have wide choices of sectors to invest. So where we should invest in those industries where growth is visible, profitability is visible, and we can expect good growth in our profits along with the consistency. So commercial vehicle industry is the part of auto industry. So if as an investor I have decided to allocate some amount in auto, then in auto also I have several choices like passenger car, two, three wheeler, commercial vehicle, tire industries, auto parts industry. So how much I should invest in commercial vehicle industry? Whether I should invest or not? Which are some of the largest player? Which are some of the best player? What should be my price to buy, or if I already hold, where I should book profits? We are going to discuss on all these things. So today's discussion will not be useful to those traders who are looking for overnight gains. This discussion should be useful to only and only those investors who are looking for wealth creating companies. Right, friends? So, if you are looking for a wealth creation module, let us begin our journey in commercial vehicle industry. So commercial vehicle industry, let us understand what is this industry. Around 2.3 crore vehicles are sold in India, combining all the industries, where in numbers, two-wheeler lead the market with around 1.8 crore vehicles because they are low cost, right? They are highly utility vehicles. While 3 crore passenger cars are there, and 70 lakh commercial vehicle. Growth is muted since the past 5 years in all segment except off highway vehicles like tractors or other heavy vehicles. Last year we saw the fall of around 20% in pure commercial vehicles due to COVID related issues. Factories were at lower consumption. Tractors saw a good jump of more than 15% this year. Currently, whole auto sector is in the recovery phase after the 5 year muted phase along with COVID related infection. So currently, as they are in recovery phase, good demand is seen worldwide post Q2 last year. The new challenge ahead is availability of semiconductor, which may pause the production in the near term. So auto industry as a whole, if we will see, here is the pie chart as we discussed. Around 2.3 crore vehicles unit are sold every year, where 80% of the units are from two-wheeler, then come 13.4% passenger vehicles, and then your commercial and tractors. This is passenger vehicle industry, where you can see Maruti is king with around 51% of their market share. There in India comes Hyundai at second number with 18% share, M&M with 7%, Tata Motors 5%, Honda 4, Toyota 4, Kia, others. Here I would like to say the company Ford Motor. Just yesterday I was reading about the company that they are going to close the operation for Ford India. Import business would be running, but manufacturing would be stopped. So that's a really bad news. And yeah, we understand. Currently, there is a challenging thing going in whole auto industry, not in India but around the world. And we have seen same thing few years back in Chevrolet, that is General Motor, also stop their manufacturing in India. But some of the new companies have already came like MG, Kia, right? But we should understand that this industry is in challenging mode. It's not easy to make high profits right now in auto industry. We saw some setbacks in Tata Motors also few years back in some of their models, right? So what is ahead? There are some challenges ahead. Demand is there back, but challenges are ahead due to many of the changes in this industry. Here is friends, commercial vehicle industry, the subject which we are going to talk today. So, friends, if we talk about commercial vehicle industry, you can see here Tata Motors have around 42% stake. So they are having a very big pie. Mahindra and Mahindra is comes after Tata Motors with 28% of the sale. Ashok Leyland 16%, and then there are others. Even Volvo Eicher. So Volvo Eicher means it is the part of Eicher motor, right? Now here, when we are going to talk about commercial vehicle industry, we are not going to take Eicher motor as a company because in stock market, that is in when you are talking about investment, Volvo is not a big chunk for Eicher. When you talk about Eicher, they are about two-wheeler company, right? When you are talking about Mahindra and Mahindra, so Mahindra and Mahindra also we are not going to see full detail because Mahindra and Mahindra in our investment term they comes in tractors, utility vehicles. So pure commercial vehicle industry is Tata Motor, Ashok Leyland, and some. During last 5 years, we saw the growth of just 3%. It was a muted growth. Sales volume were affected due to some changes in government policies, lower industrial output, declining share of road in transportation, etc. Domestic commercial vehicle market, if we see, Tata Motors occupies the largest share as we discussed in the pie, followed by Mahindra, Ashok, and Volvo. Here, this is the market cap of pure commercial vehicle industry for India. So here the total, if you can consider total market cap, Tata Motors have 58% market cap share in all these companies. So here as you saw, there is no Eicher motor, there is no Mahindra and Mahindra. Why? Because their major turnover comes from other sector. So in commercial vehicle, we are not going to talk about M&M and Eicher. We should be clear. We will be talking about those sector in other auto sectors. Right. So here who is the king? Tata Motor is the king with 58% market cap. Then comes Ashok Leyland 22%, Escort 11%, BML, VST Taylor. There are around 15 listed companies in this sector. So Tata Motor is largest and they are in Nifty 50 since a long time. Once Ashok Leyland was also in Nifty 50. But due to low growth and as some other sector are growing very faster, more faster than commercial vehicle, Ashok Leyland was out of Nifty few years back. Right? If you consider sales, Tata Motor, 88% of the sales comes from Tata Motors. Huge sales as the consolidated sales come from this company from whole world. So this is a large company with around 3 lakh crore turnover. Right? As you can see here, they are at the top, following with other companies like Ashok Leyland with 20,000 crore sales and Escorts with around 7,000 crore sales. So is the king here of the commercial vehicle, Tata Motor with huge difference of second number, third number, fourth number companies could not reach Tata Motor because Tata Motor is having around 10 times more turnover than second company Ashok Leyland. Now if you count here Mahindra and Mahindra, right? Then Mahindra the turnover of around 1 lakh crore. So yes, they are around 50% to Tata Motor. But all other companies too far. right? So who is the king in commercial vehicle? Yeah, definitely Tata Motors, right? But as you can see, the market cap is not so big. See, if they are having 88% share in sales, their market cap also should be around 88%. But no, market cap of Tata Motor is lesser if you compare it with sales. Why? We should check it. Why investors are not so bullish on Tata Motor? Why just 60% market cap versus 80% sales? We will study these all things in coming chapters. Here is the profitability of whole commercial vehicle. You can see here Tata Motor is with huge losses of around 14,000 crore. So as you saw that Ashok Leyland turnover is 20,000 crore and Tata Motor is making losses similar to Ashok Leyland. So that's a huge losses. Previous year losses were more vulnerable. Yes, this year losses were lesser, and we may see in coming time the losses may get lesser, but they are making huge losses. We should accept this. Following with the loss of Ashok Leyland. So Ashok Leyland here also is making losses of around 70 crore. All other majority of the companies from this sector, TWL, SML, Isuzu, majority of them are making losses as during past few years there was a muted growth. Majority of them are with debt burden, so they are not making profits. Here you can see in this challenging industry also, Escort, VST, and GRSE are some good profit making companies in this commercial vehicle world. So this world is different to other world. Here, the large player are not able to make profits. Some smaller player like Escort, VST, and GRSE are making good profits and not a single year profit. They are making profits consistently since long time, right? So here we need to focus on smaller player, right? You can see these are the profit margin. Sorry, debt to equity ratio. So why they are not making huge profits? Friends, due to high debt. Tata Motors, Ashok Leyland, you can see the debt to equity ratio is more than 100%. See, 100% is enough. 100% is also bad. About 30% is not so much comfortable, right? So what we should expect debt to equity ratio, it should be less than 30%. But here you can see majority of the companies are more than 100%. See Tata Motor, Ashok Leyland, so their debt, high debt is a bad thing. We may expect that yes, sales would be increasing, but who will? This decreasing of this debt could take a long time, and even if they increase sales, profitability would not come soon. Here you can see again Escort, VST, GIRAC. These three companies are with good debt to equity ratio, right? So here these are the companies with better liquidity. So considering sales volume, market share, and solvency, we can say that in the terms of market share, Tata Motor is the largest player in the sector. So that's a positive point for Tata Motor. Give one star to Tata Motor for market share. But when you check profitability and consistency, this both the things is the missing factor in both large player Tata and Ashok. While Escort, VST, and GRSE are having better and consistent profitability history. So 0 point to Escort, VST, and GRSE in the terms of market share and sell, but you can give them full 1 point in profitability and consistency. Even debt to equity ratio is favorable. Yes, you can give 1 point for debt to equity ratio to all these three companies, but zero to Tata Motor and Ashok Leyland. Then what to do? Let us check some more parameters here. What? Profit margin. Profit margin, see, if they are profit margin are somewhat -1, -2, we can say that next year they might come in profit. But here you can see both Tata Motor and Ashok Leyland are not having good profit margin, bad profit margin. We have even seen these companies making losses since long time. Ascot with a good profit margin more than 10%. So that's good margin. Even VST Dealers is having good margin. GRSE little bit low, but yes, you can say good margin. Gujarat Apollo also you can see with good margin, but no use, still they do not do business. So first thing was we were looking for some good companies doing business. Second thing, from those companies doing good business, now we are checking some good companies with better profitability. Here, which are three? These three companies with low debt are the same companies with good profit margin. Let us see their debt paying capacity. So yes, we just saw that debt of Tata Motor and Ashok was high. Even their debt paying capacity is too low. Escorts with very good debt paying capacity, following by VST Dealer and GRS. So again, see in all the parameter, all these three companies are coming at the front. So Tata Motor and Ashok with many companies fail in this parameter, while Escort, VST and GRS score good here also. Right? Let us check return on equity. See, this is the parameter where investor know that okay, this much equity your company is holding. On this equity, what productivity you are giving in the terms of profit. So return on equity again, chart Escort, VST as well as GRSE. These three companies are scoring good. Majorly, Escort is having very good return on equity, while on other side, Tata Motor and Ashok fail here also. See, Tata Motor near to negative 25%. So that's really bad return on equity, friends. Right? So now if you consider these liquidity parameters, like profit margin, the more liquid the company would be. The more the debt paying capacity, the more liquidity, the more return on equity, the more liquidity. So here you saw Escort, VST Dealer, GRSE have good profit margin, whereas Tata Motor, Ashok, and majority of others are making losses. 0 point to Tata, Ashok, and just you can give 1 point to Escort, VST, and GRSE. When you talk about debt paying capacity, again Tata Motor, Ashok Leyland 0 point, Escort, VST and GRSE, you can give them 1 point. Same thing in ROE. Again, Escort, VST as well as GRSE score better on ROE, can give 1 point, while Tata Motor and Ashok fail here. Right? So there's a high risk when we are investing in these companies. Right? See, the sector is already challenging. So in this challenging sector, we should have the company with good profitability and high consistency. If you check the sales growth, see if your company are able to grow, then in coming time we may see that you may come to better ratios. Here we can see last 5 year CAGR growth of Tata Motor is again negative. So they are not able to grow their sales. Even Ashok Leyland in negative growth. Escort with a very good growth, around less than 15 but more than 10%. You can see VST Taylor with lesser growth. GRSE we do not have data of 5 years, right? Because this is just a listed company. So we can say here, considering the growth, Escort should be your top priority. Right? Escort having better growth than all during this challenging 5 year period. So considering growth parameter, you can give 1 point to Escort while 0 to all other players. Right? And if we check the 5 year return of all these companies, see Tata Motor, okay, I am extremely sorry. I have written here 5 year return. It's really 10 year return. Huh? Sorry for this thing. So 10 year return for all these companies, you can see Tata Motors near to 0. They have even given lesser return than fixed deposit. Right? So why you got such a low return in Tata Motor? You know the answer. Ashok Leyland around 15% return during last 10 years. That's good return. So bad data, but return were good due to this good recovery. Escort with the best return around 20% CAGR in Escort, and along with VST Tiller, they also have given you better return. See, all other companies are near to 5% return. See, it's near to FD. So why to invest in these companies if they are giving us near to or lesser return than FD? This is full 10-year return. In 10 year, at least we will expect that we will get good return, right? So Escort, VST Taylor, these are the companies where return were better. If we check, see, return are not only price return. You may say my company is paying high dividend and that's the reason I'm not getting good return in price. You can check here, your Ashok Leyland have given 20% dividend, Escort have given 10% dividend, BML and GRSE, these both are government companies. So this both year GRS is giving very high dividend. So retired people can invest in GRSE. You will get 50% profitability convert into dividend. So that's good. This VST Tiller have also given dividend. Here BML have given 30% dividend, but that's not consistent because their profitability is not consistent. So don't expect that they are going to give you consistent return. So he is left now, GRSE with best dividend. And your Escort and VST Taylor again with good dividend along with you can see price appreciation was also here in both of these companies. So what I should select, friends? No doubt Escort. Let us discuss some more things about Escort. So Escorts could be the better option. In commercial vehicle industry, the king company Tata Motors is with high debt burden and inconsistent profit making, while small company Escort is very good with low debt and high growth. The Tata Motor and Ashok Leyland fail here, friends. Escort, their price is around 1374. Quarter one sales growth, if we see this year quarter one, we saw 56% sales growth and 92% profit growth. So both way they are growing good even this year. We have just updated this result on 9th September and today we are going to talk as per 9th September data, right? Escort Limited. So it's an Indian multinational conglomerate and automotive engineering company that operates in the sector of agri machinery, right? Construction machinery, material handling, and railway equipment also. The company was launched in 1944. So post-independent, this company was there. Escort Agri Machinery was launched in 1960. The company manufacture tractors under the brand name of Farm Track, Power Track, and Steel Track. For tractor, a partnership with Ford. So this was among some of the first partnership which India saw. A partnership with Ford was set up to produce licensed Ford tractors for India. Right? So post Maruti, Ford was here in India. In early 1980, Escort started making Yamaha motorcycle in India. Rajdut 350 was also launched in 1981, and you know this was a very good success story during that time, which was later followed by the Yamaha RX 100 in 1984. This was the most successful bike and loved by all youngsters during that time. The motorcycle manufacturing unit was sold to Yamaha, the main company, in the late 1990 when Escort decided to quit the motorcycle business to concentrate on texture and auto components. Right? So this was something about Escorts. Escort were able to grow their sales from 1300 crore sales and profit of 8 crore just 20 years back to today around 7,000 crore sales and 900 crore profit. So yeah, they are able to grow. Good growth along with consistently decreasing debt help investors create good wealth. See, let me tell you, friends, I have seen many companies claiming that we are going to decrease the debt, but in real sense, few companies decrease their real debt. Here is the Escort with a long commitment. Many years back, they were high debt burden, but their commitment made them debt free. Even the Radico Khaitan, I have seen the same commitment. They were debt burden, but see, year by year they have decreased their debt. So few companies are able to do this, and these are the companies which are able to do this. So even during the past year of high challenges of COVID, Escort posted lifetime high sales and profits. So that's amazing thing, right? In auto industry, there are a few players which made lifetime high sales and profit last year. Quarterly sales are also good, with sales growth of 56% and profit growth of 92%. We directly could not compare Ascot quarter to quarter due to disrupted quarter during last year. But still, we can expect lifetime high sales and profit even this year. So be prepared for lifetime high sale prices. Right? See, this is the chart of Escort. You can see 16% CAGR return in 20 years, 25% CAGR return in 10 years. So that's a good return. This was the time when there was no return in Escort due to high debt, and the company have proved. So all those bought near 600 just 2 years back, or even in the current situation, stock is in correction mode. तो ये मत कहना यार मैं तो 600 पे नहीं लिया रह गया एसआईपी करो ना फिर अभी इधर यू कैन सी कर स्टॉक इज इन करेक्शन मोड फिर आप बोलते हो मैंने वो टाइम पे भी नहीं लिया फिर कब लेंगे right? We can add during this correction mode. SIP could be done here every month on month till the stock is in correction. You can accumulate. New buying can be done during the range of 1150 to 900, and this year target could be around 1680 this year itself, right? Can even expect multi-year rally here as the economy improves. So debt-free and good margin company, what you can do? Buy during fall near in the range of 1150 to 900 and can book 5 to 10% profit at 1700. Right, friends? This was about Escort. This is GRSE listed just recently. Good company. See, they are giving you consistently high dividend. Right? You can buy near 140, can book 10% profit next year near 200. This should be a planning. Yeah, you can do SIP here also. But Escort should be your first priority. Yeah? Here is Tata Motors. See, we have not selected Tata Motor, but as many of you are holding, let me give some detail of Tata Motor. See, even I will love if this company would grow, but see what we can do. Even 10 years back, we have discussed the same thing that they are having huge debt burden. So stay away and see during this 10 year, you got very bad return, right? So here's Tata Motor currently 300 rupees. Quarter one sales growth have grown by 100%, and their losses are with 7% margin. Losses have also improved, right? So that's good thing. But in the real sense, we can't compare last year quarter with this year. But Tata Motor have improved and on many stages. Tata Motor is an Indian multinational automotive manufacturing company which is part of Tata Group. The company produces passenger car. If they are producing passenger car, why we are not discussing this company in passenger car sector, but we are discussing in commercial vehicle? They may be talking more on passenger car, but their share is too small. If you consider their consolidated turnover, so trucks, that is commercial vehicle, is their main sector. Trucks, vans, coaches, bus, luxury cars, sport car, construction equipment, and military vehicle is their business. They were formerly known as Tata Engineering and Locomotive Company. So many previous investors used to say Telco to this company and Tisco to Tata Steel. So why you know that Tisco why Tata Steel and Telco why Tata Motor due to this long name. The company was founded in 1945 as a manufacturer of locomotives. So such a long history for Tata Motor. The company manufactured its first commercial vehicle in 1954 in a collaboration with Daimler-Benz AG, which ended in 1969. Tata Motor entered the passenger vehicle market in 1988 with the launch of Tata Mobile, followed by Tata Sierra in 1991. Let me tell you, these both were a high success story of India, becoming the first Indian manufacturing to achieve the capability of developing competitive indigenous automobile. Now, in 1998, Tata launched the first fully indigenous Indian passenger car, and that was the Indica. You know, it was the highly successful car. Everywhere that time we were saying Indica, Indica, Indica. Good success. In 2008, we saw the launch of the Tata Nano, the world's affordable car, and we saw how we were a failure in Tata Nano. Tata Motors acquired the South Korean truck manufacturer Daewoo Commercial Vehicle in 2004 and purchased the greatest Jaguar Land Rover from Ford in 2008. This was their huge acquisition. Tata Motors principal subsidiaries include English premium car maker Jaguar Land Rover, the maker of Jaguar and Land Rover cars, and the South Korean commercial vehicle manufacturer Tata Daewoo. Tata Motor has a bus manufacturing joint venture also with Marco Polo, a construction equipment manufacturing joint venture with Hitachi, construction machinery company, right? Tata Hitachi, and a joint venture with Fiat Chrysler with manufacturing automotive components and Fiat Chrysler and Tata branded vehicle. For domestic business, Tata Motors should consider mainly as a commercial vehicle company with the largest share of 42%. But if we include Jaguar and Land Rover, then it contributes 78% of total sales, right? So this is Tata. Hence, when we study Tata Motor, we should see both commercial vehicle as they are leader in India, whereas passenger car as this industry affect them internationally. In India, for passenger vehicle, Tata Motor series, as just as we discussed, 5%, not good. Tata Motor with the sales of 2.5 lakh crore is making huge losses due to huge high debt and cost we just discussed. Last year overall we saw a good turnaround in sales post Q2, but overall sales were down by 4% and losses up by 12%. It is mostly presented before an audience. A debt of around 1 lakh crore is the majority of the sales with even negative, not profit, but negative EBIT, right? So maybe it may take time to come in real net profit. So we saw a huge underperformance here. See, a decade back also we have avoided this company. Even today, yes, that's a problem of profitability. So we have avoided this company since more than a decade. Tata Motor have given CAGR return of just 2% during past decade. Due to high inconsistency, Escorts can give a better return, right? Those holding Tata Motor for a long time can add some more during fall near to 40. So if you are holding Tata Motor, you can buy during fall near to 40. That's the 60% retracement level. And should book around 25% profit during the rally near 580 in next 2 years. Economic recovery. See, if economy is going to recover, you are going to see recovery in Tata Motor and majority of the companies. So what you can do, near 600 can book 25% profit. You will say Piyush भाई टाटा मोटर में 25% प्रॉफिट बुक करने का, एस्कॉर्ट में खाली 510 ऐसा क्यों? That's a debt free company. Sales could be converted to profit. Here, there's some problem in profitability, right? This is the chart of Mahindra and Mahindra. We are not going to discuss more on Mahindra and Mahindra. We will definitely discuss during the session of passenger car and utility vehicle. But just let us check the chart. Currently, it's trading near 750. 700 to 500, this whole zone should be considered as a buying zone. 5 to 10% profits can be booked near 950 this or next year whenever it comes. 25% CAGR return we saw during last 20 years, but during last 5 years, growth was muted because overall auto was muted. Mahindra and Mahindra is not a single company. They are a huge big conglomerate with very good other companies also in their portfolio like finance, like Leisure and many, right? So how much we should invest in auto? we should invest total, if you can include talk about auto, 3% weightage we should give to auto sector. Now, if you are investing in auto and you have decided to invest 3%, why? Only 3% because there are many sectors which are going to grow better. Here, two, three-wheeler, car, tires, these are going to grow by around 7 to 10%, right? But there are many sectors which are growing by more than double-digit growth. Better to focus there. Here, there is an issue of profitability. That's also a problem, right? So, 3% weightage in auto, and this 3% weightage will be eaten by two, three-wheeler as a top priority because more growth you are going to see there. Cars and utility vehicle, even tires and auto parts. So your portfolio would be divided into different chunk here. These are some challenges. Electric vehicle are going to come and they are going to give them big challenges, no doubt about it. Semiconductor. This is also a big challenge due to semiconductor shortage. Productions are going to suffer. We may see company cut the production. So what they will do if production will be cut? They will increase the price. Otherwise, profitability will be more bad. So you will see price increase, but still that's a challenging time. What is the opportunity? Demand is back. See, economy is recovering, so you are going to see good recovery in commercial vehicle also. Increasing income is a very good thing. Due to this increased income, people's affordability increases, and you will see the auto industry will benefit due to both of this thing. So do not buy or sell before self-research, or because I am telling presenter here, Piyush Patel may or may not hold the discussed stock. So you see here we have discussed about GRS and Escorts as a buying stock. I individually do not hold this company. Even in our PMS schemes, we have not suggested this company, right? Because see, we are having already some big opportunity other, but if you want to invest in auto, that's a good company, right? So these are the some disclosures. How you can reach us? We are Profit From It. We are a stock market training institute. So if you want to learn stock market, you can reach us. This is our website profitfromit.in. You can learn from here. You can even download our app from Google or Apple Store. And this is our toll-free number 1800-890-4317. You can call if you have any query or if you want to join our upcoming events. If you liked today's discussion, then only press that like button. If you think this discussion could be used to other investor, you can forward it. At last, if you have not subscribed it for this type of information. And I want to know your top company in commercial vehicle where, friend, you are going to invest for wealth. Thank you very much and best of luck to everybody.